Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome to episode 11 of season 3 of the Caribbean Business Review. I'm Joseph Cox. First of all, let me thank you all for your continued support across all our social media channels and MKR Radio. Please be advised that a new edition of the Caribbean Financial Dispatch is now available, and readers can follow the dispatch at caribbeanfinancialdispatch.substack.com. In this week's program, our special guest is Joseph Williams, Principal Consultant at Sustainable Energy Advisors of the Caribbean and recipient of the Caribbean Energy Leadership MVP Award for 2025, where we examine the Caribbean energy illusion, resilience or exposure. The discussion reviews critical timelines, overlooked vulnerabilities, and urgent steps needed to transform regional energy security. And in today's CBR briefing, we discuss process, power, and legitimacy in CARICOM, where we interrogate the issues surrounding the now controversial reappointment of the CARICOM Secretary General, which has led to at least one member state publicly objecting to same, raising critical questions of institutional direction and institutional credibility. But before we proceed, there's a matter that requires a close and more careful examination, and which I'm obliged to bring to your attention. A headline this week suggested that Caribbean energy supplies remain secure despite global tensions. Now, that may be correct at the level of availability, but it does not capture how the system actually works. Because in today's energy market, the key question is not simply whether supply is available, it's how that supply is priced, transmitted, and absorbed. And that is where the disconnect lies. Energy distributors such as Rubis continue to report strong earnings and no immediate disruption. In fact, the Caribbean is not peripheral to this system, it is central. The region accounts for approximately 56% of group earnings, making it a major profit center. On its recent earnings call, Rubis' management was explicit. They stated that they see, quote-unquote, no negative impact so far from the current geopolitical tensions. And that tells you something important. Not that the system is stable, but that it is functioning for them. But that does not signal resilience, it signals structure. Because in modern energy markets, the key mechanism is not just supply, it's pricing transmission. Rubis made this clear as well, noting that government-regulated pricing formulas act as a natural hedge. It is a system in which rising costs, whether from oil prices, freight, or insurance, are passed through rather than absorbed. And in a region that is deeply dependent on imported fuel with limited control over pricing or logistics, these costs do not disappear, they are transmitted directly into the economy. The result is a widening divide, where corporate resilience is sustained by economic strain. Because in this system, the Caribbean is not just a market, it's a margin. Now, against that backdrop, let's turn to the key stories shaping the global and regional economy this hour in Market Watch and Global Pulse. Coming up in the Market Watch, St. Lucia tables $2.18 billion fiscal 26-27 budget. Cayman records 1.3% inflation. Jamaica's trade gap deepens. Then in Global Pulse, parallel oil payment systems accelerate de-dollarization. Euro area trade slips into deficit. And Goldman Sachs raises U.S. recession odds to 30%. All that and more this hour on Market Watch and Global Pulse. Coming up next, it's a CBR briefing. This is a CBR briefing. CARICOM heads of government have agreed to the reappointment of Dr. Carla Barnett as Secretary General, with her second term set to begin in August 2026. On the surface, this appears to be a routine decision, one that ensures continuity at the administrative level of the community. But the reality is far more complex. Trinidad and Tobago has formally objected to the reappointment, not on the basis of personality, but on the basis of process, arguing that it was excluded from deliberations and that the matter was neither placed on the formal agenda nor recorded in the official communique. And it is not alone. Trinidad also asserts that representatives of both the Bahamas and Antigua and Barbuda were also not allowed to participate in the retreat where these discussions reportedly took place, effectively leaving multiple member states outside of a decision of significant institutional importance. Further, additional information coming to hand also indicates that Haiti and Montserrat were also not represented at the leaders' retreat at the highest level. And that matters because this is not just about participation, it's about proportionality and influence. Trinidad and Tobago accounts for approximately 22% of CARICOM's budget, with the Bahamas and Haiti also meaningful contributors. When countries of that scale are excluded, the issue immediately shifts from administration to institutional legitimacy. But there is a second layer to this. CARICOM chairman and St. Kitts and Nevis Prime Minister Dr. Terence Drew has framed the decision as having secured the, quote, required majority, unquote. Now, that language may satisfy a technical threshold, but it departs from a long-standing tradition within regional institutions where senior appointments are typically resolved through consensus, not arithmetic. Consensus is not ceremonial. It is what binds small states into a functioning community. And that's particularly relevant here because it's also understood within regional policy circles that the question of Dr. Barnett's reappointment was not without sensitivity. There had been varying levels of comfort across member states regarding the performance and direction of the Secretariat, meaning that any decision on a second term was always likely to require careful consultation and broad alignment. That makes the process even more important, not less. Juxtaposed against Prime Minister Prasad Bisesa's biting criticism of the CARICOM Secretariat and its management at the official opening of the very meeting where the reappointment was made a mere 2 days later is even more poignant. And then there's a procedural question. If this decision was taken at the heads of government meeting in St. Kitts and Nevis, why is there no reference to it in the official communique? Was it formally tabled? And if discussed in retreat, why was it not subsequently recorded in plenary as required for institutional validity? And then there is a further question. If this decision was taken on February 26, why was it only publicly communicated on March 25, nearly 1 month later? And this raises a further procedural question. Article 24 of the revised Treaty of Chaguaramas provides that the Secretary General is appointed by the conference on the recommendation of the Community Council, and reappointment may be made by the conference. But the treaty is silent on the procedure for reappointment and does not explicitly prescribe a voting method. That makes the sequence of process critical. Was there a recommendation of the Community Council in this case? And if so, how was it arrived at? Because if there was, how were key member states unaware? If not, the issue becomes one of compliance. And this brings the issue into sharper focus under Article 28 of the revised Treaty of Chaguaramas. The treaty provides that decisions of the conference are to be taken by an affirmative vote of all members with provision for validity, where 3/4 support a decision in the case of abstentions. But the framework presumes participation. It presumes that member states are present, aware, and able to take a position whether in support or in abstention. Where that condition is in question, the issue is no longer simply voting, it's whether the process leading to the vote was complete. At that point, the issue is no longer disagreement, it becomes contestability. And while the treaty provides for reappointment by the conference, the absence of clear recommendation, full participation, and formal recording raises a deeper question, not just of process, but of whether the decision meets the full threshold of institutional validity. More broadly, it raises the question of whether CARICOM is drifting from a consensus-based community towards a more fragmented, interest-driven structure. Which brings us to the central question. Can Dr. Carla Barnett effectively serve another 5-year term in the face of open objection, procedural concerns, and underlying divergence among member states? Because in CARICOM, and indeed in small state regionalism more broadly, authority is not imposed. It is conferred through consensus, reinforced through process, and sustained through trust. Remove those pillars, and the position may remain legally intact, but operationally it becomes far more difficult to hold. And that is the real issue now confronting the community. These are not procedural questions. They are questions of institutional direction and institutional credibility. And that's your CBR briefing. Welcome to Market Brief. We begin in Jamaica, where imports rose to 6.85 billion US, while exports fell to 1.54 billion, widening the trade gap. Air passenger traffic declined 31.4% year-on-year in February, indicating incomplete recovery. However, the country is advancing a major logistics strategy, including port expansion and SEZ development. In the Cayman Islands, inflation averaged 1.3% in 2025. More than 14 million in monthly pension contributions remain unpaid, with over 2,100 delinquent employers. In Trinidad and Tobago, reserves declined to 5.58 billion, with liquid reserves falling 24% to 3.2 billion US, prompting negative outlook revisions. St. Lucia has tabled a 2.18 billion budget with 1.83 billion in revenue. The wage bill accounts for 29% of expenditure. Barbados recorded 729,000 stay-over arrivals, up 3.3%, while congestion is affecting service delivery and productivity. Bermuda reduced payroll tax rates to as low as 9.5% and cut vehicle license fees by 10%. Guyana is launching a $6 million national payment platform, enabling real-time transactions with over 50,000 accounts already processed digitally. Now that's your market brief on the Caribbean Business Review. For more, look for us on YouTube and Spotify.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
Caribbean Business Review, our conversation with Joseph Williams, Principal Consultant, SCA Caribbean, former lead, Sustainable Energy at CDB, and recipient of the Caribbean Energy Leadership MVP Award in 2025, where we discuss the Caribbean energy illusion, resilience, or exposure.
There are some opportunities that we can be much further if we move quickly. Because by the time these things materialize to be a real bottleneck in our crisis, we could have made significant transformation. And in the context of cooperation, aggregation among ourselves, it can make
Okay, welcome back to Caribbean Business Review. My name is Joseph Cox. And today our very special guest is Joseph Williams. And Joe is the Principal Consultant at Sustainable Energy Advisors of the Caribbean, as SCA Caribbean. A man of vintage within this region when we speak on matters of energy. And Joe, in welcoming you to the program, the question, I suppose the first place I'd like to start is this. The Caribbean has routinely been buffeted over the years by periodic energy shocks, but one does not get the impression that we take it particularly seriously. And I'm just wondering if in not treating with the issues frontally and as best as we can, if we are not ignoring what has really become a structural vulnerability, an actual structural vulnerability. What do you think?
Yeah, well, thanks, Joseph. Thanks for having me. And I think you're on point with the focus on this issue. The fact is that it is highly relevant to our situation in every respect. And so the question of whether or not the governments or the countries of the region have been taking this seriously is I was about to say a tricky one. But what I really want to say is that based on the evidence, if you look at where we were in 1973, which was recognized as the really first oil shock, as we now refer to it as, and where we are now in 2026, in terms of our level of dependence on imported petroleum and petroleum products, right? Because that's what I want to focus on.
Right.
When you look at that, really, one could say the governments have not taken it very seriously, right? Because it's a few decades, and in terms of the level of dependency, we are still very much up there, depending on which figure and how you look at it, and how you draw the Caribbean, the ring around the Caribbean, that runs from 85% to 90% in terms of dependence on import for our survival, for our basic energy supply to fulfill our needs. So from that number, one could say the governments have not taken it seriously enough, just looking at the hard numbers. What is clear, though, is that all governments have recognized the risk, the vulnerability, and all governments have made efforts over time in terms of policies and strategies. The question really comes down to whether or not they have been sufficient, they have been moving fast enough, and those are the questions. I think it's clear that the answer to that is no, right? So seriously, I think certainly in terms of policy positions that have been articulated, certainly in terms of certain even legislation, certainly in terms of the reform, some of the reform, but not fast enough, not the scale, and not deep enough to allow us to be in a better position now in terms of the level of dependence, or in a better position in terms of our independence of an import, and as such we are very vulnerable. And coming to your point about structure, so yes, some of the issues are difficult to deal with because one, it's also about the economy, the structure of the economy itself. If you're largely service based as opposed to more industrial manufacturing, all of those things affect how easy you can transition, and also the options you have, right, to talk about. And we can talk about those. But essentially, renewable energy is the option. In a way to talk about alternative energy versus renewable energy. Renewable energy is the focus and the option. Alternative energy also includes natural gas, for example, which I don't advocate is really an alternative for us because of the coupling between it's a fossil fuel and it has its own set of vagaries in terms of the market, and you still have a dependency situation where you have to import. So yeah, and we can talk about what that means in different frame, but yes, renewable energy has to be the answer for us because we do have abundance of resource. We have good endowment. It's a question of how we make those things happen in a timely way and at the scale that is necessary to break the dependence.
No, Joe, I take your point quite well. But one of the things that strikes me as you say this is when I look, for example, West Texas Intermediate is trading mid-90s again. At this point in time, Brent crude is over $100 per barrel, etc. And my query remains: at what point is the price of crude high enough that it will actually spur meaningful RE development, meaningful renewable energy interventions in this region? Because over the years, there's a lot of rhetoric about it. Everybody is saying yes, is the way to go, etc., etc. Is this the solution? But it strikes me that it's almost like we're on a knife edge of a problem where it's probably not deemed high enough. for meaningful renewable energy interventions, or does it need to be even higher? I don't understand. What will be the trigger point for meaningful change?
Yeah, well, thanks a lot. I think, well, in 2008, thereabout, when we had the shock that was related more to the global financial crisis, I think there was a record high, nominal terms, about $147 per barrel was a peak. I think that was Brent. And so the impact of that was felt right across all the countries that were heavily dependent on imports and across the economy, right? Because as you know, energy is an input to virtually everything in modern life, whether it is on the transport side or through the electricity as a carrier to affect all that we do. So that's a given. And I think that was, if there was a wake-up call, that was it, because there was speculation that it could reach 200 barrels a barrel and so on, as it is now, right?
Yeah.
I think the situation now is different from then, even so, but we can come back to that in a more negative way. But the fact is that I think the price signals have been there and we have felt it. What it points to is not that the signal has not been significant enough. I think it's a question of the ebb and flow of the situation. So you have a spike and then you have a lull for a while, and the actions, that the commitments made during the spike when we are alarmed and so on, sometimes are not followed through with the level of urgency. Okay, so there's that. And then remember, we're grappling with a number of challenges. Energy is one of them. Energy is the most important one in terms of how it impacts the economy. If you ask my perspective, right, as a practitioner and understanding some of the issues, right? But the truth is that there are a number of things that grab priority attention for governments and so on. Not an excuse, but I'm just trying to say to you my perspective that it's not that there's not the willingness and so on. It's just a question how you navigate very complex situations that countries have to face with in this very difficult global environment that we have been faced with as SIDS and so on. So I think the price signal is sufficient, has been sufficient, but even more so, and when I say price signal, the impact of that, right? Because as you as an economist, you understand what that means, right? The signal is one thing, but the reality, how does that translate to impacting people's lives? And I think that has been very clear. The issue of it being the ebb and flow of it is what I think has been the risk that has become an issue, in the sense that because it's not consistent. If it was there and remained there, then, but when you look at some of the shocks, the last 6 months, a year and a half, and so on, and then afterward, they kind of get lulled back into a more relaxed position. So I don't think it's a matter of the signal not being right. I think we have some risks which are linked to, some of the risks have become materialized, which are linked to some of the other challenges we have as small states with limited resources trying to grapple with. I think that's really the issue. But I want to say now, I think this situation is a stronger wake-up call, meaning the situation that's happening in the Middle East now. What we have for the first step is not a question of disagreement between countries and things that are affecting the market in terms of the flow of supplies, right? It's not only that. What you have is a situation where infrastructure is being destroyed, right? Our infrastructure are being destroyed generally.
Right. Oh, yes.
Right? The IEA report some 3 days ago, and oil and gas infrastructure have been destroyed, one way or another, on the other side, on the supply side. So bringing back those supply to market is not something that happened by the click of a finger, right? Even if the conflict were to be resolved, or you have some cessation over the next 2 weeks or a week, you can't restore those supply possibilities. The impact of it has not been fully felt because, as you know, simultaneously there has been effort to release strategic reserves, right? And that has dampened it somewhat. So the point is, I think we're now moving in a stage where for every Caribbean government, we need to begin to ask ourselves, we need to see this thing now as existential. The need to move away from the high dependency on imported petroleum and petroleum products, or petroleum products largely, right, is now existential for us. And that's the kind of language we have to talk, we have to utilize as far as the energy security is concerned. We like to use it in the context of climate change, which is broader and so on. Right. But that's about energy security and energy independence. And so that would be my real strong perspective as it relates to how this situation is different and why we should not be tempted to be to fall back in the trap of just seeing this as something else and then we move along as usual. I think really urgent, critical crisis management type of approach need to be taken in addressing the situation.
No, your point is taken, and I'm wondering too, just to follow on to your point, because with the level of damage that has been done, you're right. This is not going to be a quick fix. In some cases, I've heard estimates. So, for example, some of the damage that has been done in Qatar with the LNG plants, they're talking about years before those things come back online fully, even if the thing stops now almost. And the question is simply this, therefore, aren't we therefore looking at a higher market equilibrium rate coming out of this exercise, irrespective of what anybody wants to say? Aren't we looking at higher rates? Even the $60 per barrel rates that a lot of budgets in this region were posited on, that is no longer even going to be practical in the aftermath of this.
I think you're right, and you're the economist here, right? So you know more about this than I do, right? But the fact is that it's really anybody's guess, and I just want to pick up on that point you make. What is one of the possibilities? The fact is that depending on where the price settles and the impact on the global economy, there's a view by a lot of the industry commentators that you could end up into a situation of a global recession of sort. That has its own, well, in this case, mitigating effect, right? Because it could reduce demand. And in that regard, it affects the equilibrium in terms of the price point. So there's that. But then the question is how long? And coming back to your point, so it's really anybody's guess. And so I think it's reasonable to assume, for the reasons we just mentioned, the fact of some of the it's infrastructure impact, right? The fact of that, you can assume that price is going to be significantly higher than where it was going forward, whatever happens, right? But even more importantly, I mean, this for me, and I just, probably move quickly to say that, why I mentioned the need for a crisis management approach is for the very fact that the nature of the conflict is such that really any card could play. And when I say that, if you think about the powers involved and the fact that there's also nuclear involved, right? Nobody likes to use the nuclear language, but the reality is any casual observer really, I really don't have to talk about people close to the thing, right? There really is not a clear end in sight, and there could be a situation of miscalculation, to put it, to use a word, right? Could be miscalculations, right? Which could mean that you have a global crisis. And for us in the Caribbean, we're so dependent. You're now talking about crisis. How do we manage? And how do we manage a crisis situation like that? And the question is about storage and how we cooperate regionally. How does Guyana play in that kind of thing? Those are the kind of things I think need to be seized. The leaders or leaders or planners need to be seized with at this time, because we really don't know. And if we're going to be waiting for that trigger point or that threshold to be reached, it's going to be probably too late for us to be in a position where we are able to survive, So that's what I meant by the potential crisis. And I think that's a real risk,
Yeah. No, again, I understand your point. But to follow on from that, it strikes me, because I've heard a number of persons reference the potential of Guyana. But isn't that Guyana and Trinidad, and those medium-term solutions are not near-term, because Guyana doesn't have a refinery. And the sad part of it is that most of the islands, not all of the islands, frankly speaking, at least along the eastern seaboard, as it were, the OECS countries, all of them import refined petroleum products. So
you're right on. And I'm not suggesting that's an immediate, but the point is that with supply in the region and with a framework for cooperation at a political level, the question, and Guyana has its own set of contractual arrangement in terms of how those is crude is uplifted and how it fits into the market. All that is understood. But the point is it's a supplier. it's a big supplier emerging with very good quality product. And the question is, in the context of a crisis, and yes, the refinery is going to be an issue, right? That's also a part of the equation. I'm not suggesting that I have a solution, but I'm just saying, if you think crisis management, that's one element that would need to be in the mix. And in that context, even though there have been many commentaries around the efficiencies and of Jamaica own small 35,000 barrel refinery, right?
Refinery,
in the context of a crisis, the value of that changes. I'm just saying. And the question is, how do you prepare in a way that allows you to be able to do some things 2 weeks ahead, a month ahead, 2 months ahead? You have to begin to think like that now. And I'm saying a crisis management perspective need to be taken as one dimension as we approach this. I'm not suggesting that everything is dropped down with those crises, but I'm just saying one element of how we respond to this needs to be putting on the crisis management a hat, and they look at all the resources at the table there, both in terms of the physical resource and in terms of the framework of the cooperation we have within the political level in the region. That is where I think proactive and responsible planning would lead us, because it's really an open situation as to where this thing will go.
No, quite so. But then how should I interpret this signal where a couple of days ago the United States announced a deal with Total Energies, right? They're going to be reimbursing Total for $928 million US for them, basically, and I'm just putting it crudely, for them to exit the wind. They were supposed to develop some wind solutions on the east coast of the US. And they basically saying, come out of that and go and establish some LNG facilities, etc., in Texas. Am I to read something into that in terms of the future of RE solutions, or is this very specific to one country and the idiosyncrasies that go with probably the leadership, etc.?
Again, I think it's a very valid question, but I would say our situation in the Caribbean and in many cities is far different from what prevails in the developed countries, and not the least of which are the United States, because there's a policy, to put it mildly, the current administration of the United States have taken a quite lukewarm, or say in some cases anti-position to some of the RE options, right? So they have selected some option that they pursue and so on and so forth. I think you can see that reflected in some of the policies or actions, as you have referred to there. I think for us, the calculus is just far different. The renewable energy represents for us the only practical option for addressing our energy insecurity situation, really, right? What is good is that it's also the solution to help to make our contribution to the climate change challenge. So while we're pursuing all of those climate change stuff, we are simultaneously, or we have an opportunity to simultaneously address our energy security, energy independence, energy sovereignty, whatever way you want to love it. All of them are important in the context of how we operate. So I don't think at any moment, any leader, anybody in the Caribbean or in any of the cities for that matter, need to look at what the developed countries are doing in their own domestic space as any signal, right? Because irrespective of even the climate change agenda, and I argue constantly over many years that the energy security and energy sovereignty issue for us is primary. It trumps the issue, sorry for the pun, of even the climate change agenda for us, given that we don't really make a significant contribution to that global stock of carbon emissions, So it is critical. It is even more important because of not even more important, but there's an added benefit in that when you look at what's happening with demand side and what's happening with data and the demand around AI and so on, there's actually an opportunity for us to leverage the energy, if we can harness it timely and at scale, to expand our economic horizons, right? In terms of the green trade, in terms of how we can, because really it's about how we're going to use clean energy support some of these demands. So in short, I don't think that's a signal for us at all. And based on the United States position right now, I wouldn't see that as any signal. What I would say is that natural gas is a very significant resource for the United States. And unfortunately, in the Caribbean, we have not fully understood the dynamics of that situation. So some countries have moved into the direction of putting in natural gas facilities and infrastructure and technology. Really and truly, it's swapping one dependence for another, really, if you think about it. And there was an experience where the natural gas prices were tracking lower, much lower. There was a decoupling in 2008. And so most people say, okay, it has been flat over the years. But if you look at what has happened over time, it has tracked up, and also you're still left with a situation where the ships have to come, right? You're still locked into that situation. And then with few players, you're really at the behest of a few dominant market players who can change the rules of the game very quickly on you know? So even though it's cleaner and it's touted as that, and we agree, I think some of the countries may not have, seen some of the shortcomings there. And it's something that I think in this situation we need to really wake up to.
No, absolutely. Because this is one of the concerns that I've had coming out of this exercise is that the markets are seemingly responding to headlines, frankly speaking, versus economic fundamentals. And therefore, the whole thing is topsy-turvy and just all over the place. You wonder sometimes, where do we go next? So, I mean, I do take the point. And the other side of it now, Joe, is that part of the challenge with our solutions has been one, in terms of the upfront capital cost, right? Because that has been a deterrent in some markets. Two is a matter now for me of timing. Because throughout the Caribbean, to my knowledge, guide me if I'm wrong, but part of the issue is that a lot of the electricity, public electricity infrastructure is now dated. End of life should be changed, etc., etc. But I don't know if it's because of fiscal challenges or what, but the solutions don't seem to be tending towards renewable energy solutions, but there's a replacement of the status quo and the enhancement of the status quo.
Yeah.
And I wonder where we're going.
Yeah, well, I think that observation is a reasonable one. It's put this way. I think the point you raised earlier in the conversation about taking this seriously and moving at pace, well, I refer to need to move at pace, is really the heart of the problem. First of all, the renewable energy, I don't think is a fair commentary to be, saying that high capital cost is necessarily the biggest barrier or a major barrier. Okay, so it is a fact that relative to a diesel plant, you're gonna have but that's a fact. But it's not necessarily a barrier at this stage, right? Because once you have more access to even climate-related funds to make things happen. That's just an example. But beyond that, there are solutions available. The market would be a solution that can make capital available, and there's a lot of liquidity in certain spaces, depending on how you look at that, for doing different things. So that's the first point. The other point is that the renewable energy options are not all equal. A geothermal plant is different from a solar plant. No, it's two different quality of power. When I say quality, I'm using that advisedly, meaning one is base load, one is more variable or intermittent, and those have issues with that. So we understand that. But let's think about this. Where solar and battery is today, in terms of price, the price point, there is nothing that stops, for example, every government in the region to, let me not say renewable energy, but solarize all public sector facilities right across the region. There's nothing that stops. Immediately when you do that, you drop out 10 to 15, even up to 20% of your electricity demand, because that's what the public sector assume. And there's nothing that stops us from doing that. No, you're going to have to make some big step in terms of the regulatory frame and make sure you take some strong policy position. But I'm saying, coming back to your point at the start of this conversation, the situation has long warranted us to take very strong action to move in that direction. Because if governments take the lead, what happens? First of all, they're one of the biggest actor in terms of the space. So it's going to affect the market in terms of that whole procurement. It's going to set the pace for the rest of the private sector. You're going to get financial models that involve the private sector who are going to provide the solution. And there are ways to do it that it doesn't have to be a burden to the government. For example, there is no reason why, there are solutions. For example, the ESCO model. It just requires that government pay the bill, because the capital can be found to do it easily. Right? You're going to reduce the cost of your bill on a monthly basis, and from the savings you can begin to pay for some of those investments. I mean, those models work. They work around the world. There has to be a commitment for government to pay. right? They have to pay their bill. But I'm saying that's a small cost relative to being burdened with this heavy cost of energy for the public sector, which then undermines government ability to service some of the other important things that government have to do. Only government can fund citizen security. That is not a private sector matter.
Yeah,
Only government can deal with the social and the health issues and education issues. To the extent that the government is spending money on energy that could have been provided by renewable energy and use those budgetary benefits. The benefits from that to support is a no-brainer. And I'm saying, if governments want to send a strong signal, and this applies to almost every single government across the region, there is no reason why you can't be 100% there in all of those facilities and utilize things that have worked around the globe.
Right.
You know, so coming back to your point, I think there are issues. There are issues with the grid and so on, and some of those have to be dealt with and handled in the context of appropriate regulatory frame, because there are real costs there that have to be transferred and borne by the customer base of the utility. And so on, those have their own set of challenges, but there are also instruments and experiences that we can use. So the grid itself, the network itself is a challenge, but I'm still stuck at the point that there's a lot more that can be done, even at very low effort on the part of the leadership across to move that needle. And once you move to 10%, 20%, 25%, it's going to affect the market generally. You're going to set the stage, and then we can find the right instrument. The net billing is a useful instrument, but we need to make it work for us in our context, right? So there are a lot more I could say there. But coming back to your point, there are issues, no question, but they're not beyond us. And I think a little bit more strong action on the policy front and the regulatory front, we could see a lot more. And leading by example would be a strong signal to the market, the rest of the economy, the rest of the country, and to follow through.
Yeah, but again, I suppose to get down into the weeds just a little, I suppose part of the constraint is dependent on the particular wording of the respective electricity license that obtains in the various countries, because some of them can be seemingly are quite restrictive in terms of how you can develop and how you can nuance these things.
No, I alluded to the fact that some of it is not easy, but there are things that are there are some parts that are easy. So, for example, we talk about the government taking the lead. Okay, even as we talk about building out for increased contribution of renewable energy for the energy security and all of those objectives,
Right.
clear on that. Even as we do that, we also have to be doing it in a way that is resilient, because whatever we're doing, it needs to recognize that we are in a very exposed situation as far as the disaster risk and the hazards are concerned. So we have to find a way to promote, for example, distributed generation, mini microgrids as a big part of the mix. Utility scale solar or utility scale wind can't just be it. It has to be diversified, it has to be appropriate. But coming back to your point, so government has the responsibility to challenge these things in terms of a policy framework. The policy is responsive to the crisis, for example, that we're talking about now, the crisis. It's also responsive to where the government wants to go. And the utilities who have a 50-year license can be brought to the table as a partner. There's no country. If the country is not able to respond to the risk that it faces, there's no utility company that's going to function and be profitable and be a good going concern in the country. So my point, in that context, that there's a common challenge, a challenge that faces us, and we need to find a way around it. It is in that framework that we're going to come back to say, look, this is where we need to go. You are a key partner. How are we going to look at this? And some of that means renegotiating in a way that is a win-win for most persons, befitting the situation. So I'm not suggesting that it's an easy task in some cases. In some cases, it's easy, right? Because some of the licenses are at a point where they need to be reviewed and so on, and you need to now begin to look at how you proactively treat to these matters in the context of the renewed license. So there's that. But many of them are near the end of their lives, and many of them, even if it's not, it's a question of how you bring the partners to the table. The utility is a key actor, is a key partner in that conversation, because it's about the welfare of the citizens, about the countries, about the economy. And what we're trying to do is to pursue now in a way that we address risks. There's a climate risk, there's the energy security risk. And how do we use the technology and the instruments available to find appropriate solution to make sure we are more resilient in that country. So no question, you're bang on with it, but I think it requires some leadership now in the context that we are.
Understood. But then one other little thing before we have to come to our close, but one other little thing is that when I see, for example, countries like Barbados, been pushing, for example, EVs, electric vehicles, and that type of solution. But that's on one side, but on the other side, they are constrained by the supply. They have supply constraints, issues with batteries, the battery components, etc., etc. Even coming out of this crisis right now, there is a severe shortage of helium. Helium is a key component in the production of the chips. Without the chips, computers, cars, etc., those are the issues that will come to fruition. So I'm wondering how to counterbalance this now within this particular dynamic.
Yeah. Well, again, there's no easy answer, right? But what I would say is if we are proactive, we can be much further on the curve than we would otherwise have been. And one of the things we have to recognize now is that years ago, a decade ago, when we recognizing that the transport sector in many countries consume anywhere between 40 and 60% of the liquid fuel import, right? So it's a significant part of it. And so years ago, a decade ago, that was a problem for us. We couldn't even begin to think, we're going to address that because biofuels were under challenge because of issue of sustainability and lots of issue competition with food and agriculture and all of those. Now we have a technology that is largely proven, right? We are in the commercialization, right? So it's a question of how we position ourselves. So there's a scarcity. But the question is, how do we quickly move to adopt some standards that make it easy for us to do pool and aggregation in terms of how we procure these things? And again, we start with the public sector and those heavy demand areas that we can begin to make a big difference. Because once you do that, it makes a difference in market. So yes, there are shortages. Yes, there are going to be supply chain issues too, linked to the crisis, no question. But if we are proactive, we are already, EV is not something now that we have to be thinking about. I wonder if it works. There is with everything. But we are much further up the learning curve. We are much further in appreciating and accepting it. It's much more greater acceptance in the market. And so the question is, how do you make it more affordable? How do we make it available? How do we find solution even in this crisis where people can simply go and get a package, can combine some EV, they have a low interest loan, and they can put up a solar system to support it with some battery and make that very easy and provide some turnkey solution where the private sector is ready to do. How can we do that over the next year? Because between the next 6 months, we can come up with those solutions. Or development banks can be a part of that chain along local development bank with the regional banks. And it's a crisis. And we have to look at it like that. So we no longer have a very high mountain to climb in terms of people accepting this technology and so on. Again, I'm saying not that that's risk-free. I'm not suggesting it's risk-free. I'm just suggesting that we are much, much, much further than we were a decade ago. And we should make use of that window. And I'm also suggesting that you're right about some of the constraints that will come. But between there are some opportunities that we can be much further if we move quickly. Because by the time these things materialize to be a real bottleneck in a crisis, we could have made significant transformation. And in the context of cooperation, aggregation among ourselves, it can make a difference because it's about volume. When you have an order that is represent an aggregate of a few countries as opposed to one little country doing one little sector, it makes a big difference, especially for public sector. And governments can leverage their position in terms of the cooperation they have, right? And get some of the benefits to benefit their economies, Again, it comes back to that leadership and understanding where we are. Because things have changed, and it's not perfect. And you're right about some of those risks. They're real and they're happening. But if we move fast enough, we can make a lot of progress in this window, right? And that is my posture. So you're bang on in terms of understanding some of those risks. But I'm an eternal optimist in terms of our being able to make a big difference if we move timely and at scale and in a way that is corporate, that leverages cooperation, right? And utilize our strengths. Yeah, it's possible.
All right. And on that note, I couldn't have said it better myself. And on that note, that's where we have to leave it for this week. Thank you so much, Joseph Williams, Principal Consultant at Sustainable Energy Advisors of the Caribbean. As usual, Joe, your perspective is bang on and food for thought. So thank you so much.
Nice talking with you. And
Yeah, man,
congrats.
sure.
Good program. Thanks.
Good.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
This is your Market Watch. Across the Caribbean, economic activity continues to reflect a mix of growth, fiscal adjustment, and external pressures. In Jamaica, imports rose 2.2% to $6.85 billion for January to November 2025, while exports declined 11% to $1.54 billion, widening the trade deficit. The country is also advancing a logistics expansion strategy, including the $80 million Westlands project and the $8 billion Jamaican dollar Caymanas Special Economic Zone. In St. Lucia, a record $2.18 billion budget has been tabled with projected revenue of $1.83 billion and a $212 million deficit. Debt service has risen to $391 million, with wages accounting for 29% of expenditure. Bermuda has approved payroll tax reductions, duty cuts, and a 10% reduction in vehicle licenses fees, with a combined fiscal impact, while increasing health insurance premiums to support spending. In Trinidad and Tobago, net official reserves declined to $5.58 billion, prompting negative outlook revisions, while liquid reserves fell 24% to $3.2 billion. The Cayman Islands recorded inflation of 1.3% in 2025, but more than $14 million in monthly pension contributions remain unpaid, with over 2,100 delinquent employers. Ghana is preparing to launch a $6 million national payment platform, enabling real-time transactions alongside continued expansion in agriculture and high-value exports. In tourism, Barbados recorded a record 729,310 stopover arrivals in 2025, while Jamaica's passenger traffic declined 31.4% year-on-year in February to 274,500 passengers. Elsewhere, Antigua and Barbuda is holding electricity prices despite rising oil costs, while the Bahamas could reduce its import bill by up to 5% through targeted trade diversification. Regionally, ECLAC projects growth at 2.4% in 2025, with persistent poverty, climate risks, and limited intra-regional trade continuing to shape the outlook. Turning to regional markets and currencies, foreign exchange markets remain broadly stable across CARICOM, with most currencies holding their pegs or managed ranges against the US dollar, including the Bahamian, Barbadian, and Eastern Caribbean dollars. While the Jamaican dollar trades at 159.16 to 1, the Ghana dollar at 2.18, and Suriname at 37.64. The Haitian gourd traded at 131.53. In equities, Jamaica Stock Exchange advanced 1.22% to close at 346,738 points, while Trinidad and Tobago rose 0.61%. Losses were recorded in the Bahamas and Barbados, while regional composite indices showed mixed but generally modest movement. Among movers, Proven Group gained over 14%, while JPSCO 7% declined by 12.66%. Now that's it for your Market Watch. I'm Joseph Cox. Global Pulse is up next. This is CBR. our global pulse, we begin in the United States where business activity slowed to a near one-year low with the S&P Global Composite Index at 51.4, while input costs rose to their highest level since May and employment declined for the first time in a year. Goldman Sachs now projects Brent crude at between $105 and $115 in the near term, raising inflation forecast to 3.1% and increasing U.S. recession risk to 30%, though not as a base case. In Europe, the euro area of trade recorded a 1.9 billion euro trade deficit as exports fell 7.6%, while across the EU, exports declined 10%, signaling weakening external demand. The UK is also facing rising cost pressures with inflation holding at 3%, core inflation rising to 3.2%, and manufacturers reporting their sharpest cost increases since 1992 amid higher energy and transport costs. In Asia, Japan is deploying 80 million barrels of strategic reserves, equivalent to 45 days of demand, as over 90% of its crude imports remain exposed to Middle East supply risks. At the same time, China's economy opened 2026 with strong industrial output growth of 6.3% and export growth of 21.8%, but retail sales at 2.8% and private investment down 2.6% highlight weak domestic demand. Energy markets continue to adjust, with Saudi Arabia redirecting exports through Red Sea routes, driving freight rates down from over $450,000 to approximately $200,000 per day, even as overall supply remains constrained. Higher oil prices are also strengthening Russia's fiscal position, generating up to $150 million per day in additional revenue and reducing the impact of sanctions. At the financial system level, parallel payment systems are expanding, with over $500 billion in intra-BRICS trade increasingly settled outside the dollar, while the U.S. dollar's share of global reserves has declined to 56.9%. In policy developments, the United States is shifting its energy strategy, reimbursing Total Energy's $928 million to exit offshore wind and redirect investment into LNG and oil and gas. Meanwhile, inflation pressures remain mixed globally. Mexico's inflation has risen to 4.63%, while Japan's headline inflation eased to 1.3%, reflecting subsidy effects, but with underlying pressures still elevated. Canada has increased its federal minimum wage to $18.15 per hour, maintaining indexation to inflation, while Spain is raising tourist taxes to address housing pressures and sustainability concerns. In global markets, oil prices move sharply higher, with West Texas Intermediate at $100.78, up 6.72%, and Brent at $114.12, up 5.66%, reflecting continued supply and disruption risks. Natural gas rose 2.73%, while OPEC basket recorded a sharp correction, down 19.47%. Equity markets were broadly lower, with the Dow Jones down 1.73%, the S&P 500 falling 1.67%, and the Nasdaq declining 2.15%. In Europe, the DAX and CAC both declined, while in Asia, Japan's Nikkei fell 0.43%, and Hong Kong's Hang Seng posted a modest gain of 0.38%. Now that's it for the Global Pulse. I'm Joseph Cox, and this is CBR. Well, that's a wrap on episode 11, season 3 of the Caribbean Business Review. Thank you so much to our loyal audience across MKR Radio and all digital platforms for your continued support. As always, we stand by our mantra that knowledge is strength, but information is power. Our special thanks to Joseph Williams, Principal Consultant at Sustainable Energy Advisors of the Caribbean, who helped us unpack the region's structural energy vulnerabilities, highlighting how decades of policy inertia have left the Caribbean dangerously exposed, and why a crisis-driven approach to renewable energy is now essential. Strategic takeaways from our discussion. 1. Energy security, not fuel prices, is a real catalyst for renewable adoption, yet policy responsive remain reactive, driven by headlines rather than long-term strategy. 2. Reliance on imported fuels and natural gas reflects a flawed transition model, as true resilience requires accelerated investment in local renewables and distributed systems. And 3. Execution, not ambition, is a binding constraint, with outdated policy, regulatory, and licensing frameworks delaying deployment despite clear low-cost opportunities. The latest edition of the Caribbean Financial Dispatch is now live, shared on LinkedIn, in your WhatsApp statuses, and via the link in our YouTube comments. Readers can now follow and subscribe at caribbeanfinancialdispatch.substack.com. You can also listen to this episode at your convenience on Spotify. Don't forget to like, share, comment, and subscribe, and follow Caribbean Business Review across all platforms. Until next week, same time, same place, I'm Joseph Cox, and this has been the Caribbean Business Review.